Good morning and welcome to Financial Fridays. Last time we talked about tools for investing. Today we will be covering credit, which is another tool that has a wider use. So credit comes with differing titles like credit cards, loans, mortgages, and so forth. But it all works around the same way, just with different rates and different spending limits. Let's start with one that is the easiest to get, credit cards. Now, credit cards will help you get a credit history, and this is very important because this will help you get loans or mortgages later in life after you've built up your credit rating. There are 3 different credit firms, and you can have a different score with each firm. So you should get a card that reports to all of them, like Capital One, BB&T, or Chase. Other cards report to all credit firms, but these are the ones I know. Other cards report to all the credit firms, but these are the ones I know personally. Not every card reports to all 3 credit bureaus, and this isn't very helpful down the road. So this is something that you'll want to look at before getting a card to make sure that it reports to all 3. Now you should get a credit card as soon as you are able. This is so that you can build your credit score and build your credit history. The key to making this work is to treat your credit card like a debit card, and not to spend more money than you have. If you feel like you're going to have a hard time with this, then make sure you get a card with a really low limit, something like $200 or so. If I was suggesting a card to you, then I would suggest you take a look at your buying habits and see if you can get a card that reports to all 3 bureaus and will give you rewards for the places that you buy at. For instance, the Amazon credit card, which is with Chase, will give you 3% of your spend at Amazon as points, 2% of your spend on gas, restaurants, and prescriptions as points, and 1% for everything else. 100 points equals $1. While this is not much, you are getting something for spending the money that you would spend anyways. So it works out to a pretty good deal in the long run. That lets you get even more value out of your hard-earned money, so long as you don't spend more trying to get more points. If you want to take better advantage of the 3%, then you can buy gift cards on Amazon for the store that you are going to shop at anyways. You do not have to pay off the credit card the moment you use it, but in order not to get hit with pretty hefty interest rates on the money that you spent, make sure to pay the card balance off before the end of the month. Now that we have talked about credit cards a bit, let's talk about loans. Different loans will be filed under different names due to risk of the borrower not paying it back. You'll normally only need a loan type for when you are going to buy a house or start a business. For cars, people usually do payments through the places they are buying the car, so they can get a lower rate. I've heard of people in major need taking out a loan for a used car, but it's not something that I would recommend. I'd also suggest staying away from loans for stocks, or most passive income strategies. The money gained from these just does not outweigh the interest rates that you'll be paying on that loan. Now, you're going to get a loan. There are many places to get a loan, but your best bet to get a low interest rate on your loan would be to head to a local bank and set up an appointment to talk to somebody. They will then help you get everything set and weigh how risky the investment may be. Some will even be nice enough to tell you how you could get better rates or have a better strategy on your investment. When you are borrowing for a home, it is normally referred to as a mortgage. Mortgages are more secure loans that are specifically tied to real estate property, such as a land or a home. The property is owned by the borrower in exchange for the money that is paid in installments over time. The end goal being that the borrower eventually comes to fully own the property once the mortgage is paid off. This is not as risky for the banks because if the borrower repeatedly misses their payments, then the land may be foreclosed upon, meaning the lender takes ownership of the property to recoup financial losses. Credit cards and loans of any type are not something to be feared. They are another tool that we have to achieve our goal. Whatever they may be, know that these tools can get you into some bad places if you're not careful. So plan out what you'd be able to manage, and then figure out what you'd do if an emergency happened. In closing, much like your money, use these forms of credit to work for you. Look into your budget and don't take the loan if all free money is going to have to be paid to the loan. You want to have some breathing room for your money after all. This has been Financial Fridays with Kyle. Fortune favors the bold. Take care.